Hello and welcome. You're tuned into this brand new show called KYC, stands for Know Your Company. And in this fast-paced world of stock markets, investors are bombarded with information daily, but what they often lack is a deep and comprehensive understanding of companies. Now, what KYC does is it gives regular investors powerful insights, actionable insights into the fundamentals of single listed NSE companies, one company a day, and that's what we try to bring to you. Now, let's start off with today's company. Today's company is KPI Green. Now, in terms of what the company does, it's, as the name suggests, part of KP Group, and it's the green energy arm of KP Group. It develops solar, wind, and hybrid renewable power facilities. Largely, it does captive solar power as well as IPP. In fact, it does independent power produce. It works as an independent power producer for renewable energy as well as provides services to captive power producers under the Solarism brand. So, does a little bit of both. In terms of order book, it's got around 2.5 gigawatt orders in hand largely, and what you'll see is 52% of the order book is under the IPP segment. The balance is CPP, IPP being independent power producer and CPP being captive power producers. Now, currently 53% of the order book consists of solar orders, balance are mostly hybrid. And when you're looking at the current outstanding EPC order book, it's roughly 2,500 to 3,000 crore worth of book. That's how it's adding up. Now, there's one order in particular and that we want to talk about. It's the Coal India order that we're going to talk about. It's received around 1,311 crore of order to set up a 300 megawatt ground-mounted solar PV plant. Now, the plant is to be located in GIPCL Solar Park in Khavda in Gujarat, and the order includes operation and maintenance services for a period of 5 years. There you go. That's also the O&M part of the contract. What's the FY25 guidance like? What's the management expecting going forward? They're expecting a 60 to 70% top line growth for FY25. They're expecting to maintain a net profit margin of roughly 16 to 18%. And they're expecting the IPP, which is the independent power producer segment, to account for around 33% of future revenues. Profit margins could improve if the mix of IPP projects actually goes up or increases. That's how it's playing out. But I'm going to bring in Mihika very, very quickly. And while we are at it, I want to also quickly highlight some factors that we look at, which are some standard factors which we've ironed out, which we look at in every show of KYC. These are the factors. We'll check the income statement, how healthy the growth is. We look at the balance sheet, whether the balance sheet is tuned well in terms of capex structure. We'll also look at return ratios, how the return ratios are lining up, the cash flows, whether they are on an increasing trend or not, and if not, why so, the shareholding pattern. Thereafter, we look at the street cred, which is what's the kind of stock performance that we've seen all the way up till now. Dividends is something that we generally focus on, but this time around, for this one, given the kind of growth trajectory, we'll look at the valuation picture, and we'll also look at street coverage. Now, let me quickly take it across to Mihika to start off on the income statement. Thanks, Mihika, for joining us. Break this down for us. How has revenue profit grown for this company?
It's been significant in H125 itself and in FY24 itself. You know, if you see the 3-year CAGR now, in FY24, revenue stood at around 1,000 crores, and that's an 111% compounded annual growth rate over the past 3 years. Same thing with EBITDA, 417 crores in FY24, a 96% 3-year CAGR, and net profit at 161 crores, which is a 93% CAGR. Even if you see the H1 FY25 results, results. It's been a strong set of numbers. So it's a thumbs up on this parameter. In terms of the balance sheet, well, Harsh, how does the balance sheet looking like?
Yeah, interesting one, right, Mihika? You've seen an equity raise, which has obviously aided the numbers on the equity side of things. And you'll see how the total equity has gone up from Q1 to Q2. What has that led to? Look at the total debt. The debt number has come off substantially, and therefore the debt to equity has improved quite dramatically over the last 3 to 4 months, which is painting a good picture for the full year FY25 already. But what plans do they have going forward? The free cash flow will likely continue to get better, and therefore where do they invest the money as well is going to be critical. But the balance sheet as it looks now, the revised one at the end of Q2 FY25, looks very, very healthy. A clear thumbs up on that count, Mihika.
Yes, it does. And you know, it's a clear thumbs up for the return ratios as well. We have your return on equity as well as the return on capital employed. You've seen the return on equity. 2021 it was 20%. 2023, 53%. It has normalized a bit in 2024, but it's still healthy at almost 30%. Even in terms of your return on capital employed that the company has been, you've seen a steady growth from 12% in 2021 to 19% in 2024. Which is financial year. Let me just put that forward. So it's a thumbs up on this one. And even the cash flows are looking good, Harsh. Yeah,
incrementally cash flows are getting better. And it'll be great to get perspective as to where does it go from here? Because with most power companies, setup is one thing, but it's also the O&M that starts to kick through only once the setup is completed. So going to be interesting to see that. The other piece, though, is shareholding, right, Mihika? Yeah. Promoter shareholding, always having good skin in the game is always more appreciated. Yeah. And in that sense, if we can pull up the shareholding pattern as well, the shareholding reflects that while the promoter holding has fallen, but that's because of the fresh issue of shares. And therefore, you're seeing that fall in promoter holding. But outside of that, nearly a 50% promoter holding in a company which does a large amount of capex, certainly healthy, and part of KP Group as well.
And you can see the interest as well, because when the fresh issue happened, you can see your foreign investors as well as domestic investors increasing their stake, which is thumbs up in terms of, who is looking at the company as well.
Yeah, that's a very interesting take. Yes, that's right.
And in terms of street care also, in terms of stock performance, is done fairly good itself. In the 5-year time period's up 803%. That's a 9 times growth. And even in terms of your 1-year performance, the stock is up 78%. So that's a thumbs up on that account, but it's valuations where, the stock has gained so much. Current valuation stands at 56. This is the price to earnings ratio, which is, it's at a multi-year high, even higher than the 5-year historic average of 46. But that's how the stock has moved. So it's a thumbs down on terms of from valuation standpoint. No direct peers, so it's also hard to, compare in terms of how it stands on industry levels. But lastly, Harsh, it's the consensus ratings in terms of, who's covering the stock.
Yeah, far and few in that sense. I'm not sure if that's a thumbs down or should that be a neutral, but technically speaking, no analyst coverage on the counter. That's what it essentially says. One brokerage with a buy call, 1,099 being the target price. So far and few on that sense, but is that the best way to judge? Well, not really. We can have or get better perspective from the management. But let's move on to our SWOT analysis, right, on this count. Let's look at some of the strengths and weaknesses. Mihika, let's start with that.
So in terms of strengths, we have a strong order book that gives the company strong revenue visibility over the next few months. It also has diversified revenue streams in terms of your IPP segment, your CPP segment. It also has an EPC component. In this, in terms of weakness, yes, it does have exposure to commodity prices in terms of certain key raw materials, and the high stock valuations do stand as somewhat as a weakness. But in terms of opportunities, Harsh, I mean, it's a booming sector.
Absolutely. Power has been in play since the last couple of years. The kind of move we've seen in some of these power players has been strong. So demand, not a concern at all. The government's focus on renewable has been extremely sharp, and that will likely only aid the company going forward, given its strong focus with regard to renewable. Now, in terms of how the global setup is for a renewable energy company as well. Emerging markets, everyone wants renewable energy solutions and therefore well placed in that sense. From a supply perspective is where the challenge is. The demand is not at all currently in question, and we'll try to get more insights on that, the size of the opportunity. In terms of threats, high competition in the IPP space. You've got several players. Some have rebooted in a certain sense over the last 2 to 3 years, and therefore that is one thing that we'll have to keep in mind when analyzing this one. Also, policy and regulatory changes. The changes are happening at a fast pace, and in that sense, one would really need to be on the ball when it comes to regulations. So let's now quickly look at the ratings on this one. We give it a 6 on 8 on our ratings list, with only a couple of misses. One on the consensus analysts tracking the stock, and the other one is with regard to valuations, where obviously valuations have moved up very, very quickly. But let's quickly have the management on board, and it's great to have you in the studio. We have Dr. Farooq G. Patel, who is the Chairman and Managing Director at KP Group, to talk to us. So firstly, welcome. Thank you so much for joining us, sir.
Thank you very much, and very good morning to you.
Right. So I want to start off with the size of the opportunity available and how well placed you are in making the most of it. Just give our viewers perspective on that.
See, one thing is very clear in the KPI, that the business is good, the orders is good, and of course, as you have assumed, that this time also the revenue and bottom line both will be covered very well by the team. So you can say we have a very good order book. We have in place every order work in progress. So we will get the 2025 in a good and at the same trajectory till 2030, as we have said. We are growing on a pace what we had before.
Let me first, the company recently signed an MOU with the Rajasthan government. Something that stood out for me is that the government's also going to help you, get the regulatory processes in check. So could you maybe give us in terms of how big this MOU is, and what's the plan in terms of how this MOU is going to develop going forward?
See, we have signed the MOU with the Rajasthan government, as the Rajasthan government had the very lucrative regulatory things are there, and in very near future KP will be participate in the execution mode also over there, and we are trying to achieve our goal by 2030, 10 gigawatt from the Rajasthan. Also we will do some contribution in their by this MOU, which we will get help from the government, what we are seeking, and we will do it nicely. The numbers, you can say, every year we are going with the 50 to 60% CAGR. So in that CAGR, Rajasthan will be the one of that thing.
And in terms of the opportunity size, in terms of capacity for the solar and the wind projects, how do you see that panning out?
See, one thing is very clear. Today we have the order of 1.3 gigawatt in the IPP, 1.6 gigawatt in the CPP in KPI. And already we have done the 508 megawatt till date in Gujarat. So, and we are reaching towards our goal of 10 gigawatt from the, not possible from the one state. So you can say we are exploring the Rajasthan, we are exploring the Madhya Pradesh, we are exploring the Maharashtra and Andhra Pradesh also. So you can understand that at least 2 gigawatt, 3 gigawatt will be in Rajasthan in near future.
Understood. And sir, you've got a 3,000 crore order book, which is in line. You've clocked roughly 1,000 crore of top line in FY24. You're expecting a 50 to 60% growth on this top line, conservative. You've suggested 60 to 70%. In FY25, where do you go from there? Does that number only continue to go up? Does a 50 to 60% growth look visible for the next 3, 4, 5 years? For how long?
we are very confident to not only visible, we are very confident that we will do the same growth till 2030.
Okay, and what's the kind of margin that one can expect? The PAT margin, what you've guided for, is something around mid-teens. Would that continue to be the case, or would scale help you get better with regard to a PAT margin?
A small correction will be there. It may small correction because of the when you go in a big say revenue stream. Today you are on the say 1,000 crores of the top line. Tomorrow will be 2,000 and then the 5,000 crores and all. So over there today is 17% is EBITDA. Then it may go to 15 or 14%, but the in terms of numbers, it will be the highest every year, which you will find till 2030. See, today we have the order book of 3,000 crore rupees, but it is only and only confirm order. It's not the order which is in pipeline. You will find in a very near future the pipeline is very strong, and we will get the more and more orders in near future.
So let's then break it down with what's confirmed right now. 3,000 crores. There's a somewhat a 50-50% mix in terms of IPP and CPP. So if you had to look in terms of your IPP order book and your CPP order book, what could be the execution timeline of the current order book?
See, today the IPP is 17% and the 83% is the CPP.
Yeah.
This will be continued till the 2026, 27 and 28 the things will be changed because the IPP you are getting the revenue after COD only.
Yeah.
So in IPP the capex will be high. In CPP you don't require any money, but your top line will be there. But the product mix is such a nice way by the financial engineers that you will get the depreciation from the IPP and you are diluting your tax portion from the CPP whatever you earn. So they are managing this way, like that by the 2028 your IPP will be 25% and the CPP will be 75%. This is the product mix and the revenue stream will be.
So in terms of when you look forward, your IPP in terms of your order book and your revenue contribution, do you expect this to increase?
IPP will be increased. Today is, as I say, 17% to 25%. I'm talking about the percentage. When the revenue top line is 1,000 to say 3,000, 5,000, 8,000, and over the 25% IPP is quite a very big achievement for the company. Because today is a 171 megawatt is IPP, which are going to be by 2026 March will be 1.3 gigawatt.
Yeah.
And still you are taking, we are saying that is a 25%. So you can understand.
Yeah. And in terms of your bidding pipeline, what's the strategy there? I mean, competition is increasing. It's a booming sector. There's demand and tenders floating everywhere. So how does KPI Green, in terms of its strategy to get the new orders in hand, how does it, work that out?
See, KPI's strength is execution, number one. And the KPI is a very experienced player in this game. By till 2008, we are in this solar and wind things. So we have enough capable and the educated people who are doing the renewable energy, and we have a 1,200 people strength as a group, and that all help you very well in the execution. So once is getting the order, and second is the execution, which is very important to go for the finish line. And that we are proud to say that till date we have whatever we taken a job we have completed by in the timeline. So that is our strength, and we will be the preferential contractor or the EPC player for the whoever want to do the CPP or IPP.
Understood. So want to understand on the on annuity, right, on the O&M side of things, how much does that contribute to your top line currently?
Currently, in numbers, you can say 83 crore rupees.
So very, very small.
And it is a small, but the time is grow. We will reaching to the by till date, whatever we are doing, say IPP or the CPP plants, we have already completed more than 200 crore rupees by 2026 in the current scenario we can see in the top line contribution from the say NVT as a O&M and lease.
Okay.
But it will grow whenever and whatever we are doing. Today we have a portfolio of 5.5 gigawatt will be increased by the 2028 about 5 gigawatt. That all O&M will be ours only because we are very powerful in that also. We have our own robot system and all the things.
You know, we saw it in the coal project, Coal India project signing. Is the company strategizing, you know, going forward, the orders will have an O&M component, you know, attached in order to grow that as an additional revenue stream as well?
No. As I told you, whatever plan we make, we prefer to do the maintenance of that plant for the 25 years also. And that way we are designing the plan, and we will be the lowest bidder in the O&M also in near future.
Understood. And so just give us a 2-year forward because the base is low right now. Say your top line is roughly 3,000 crore 2 years from now, just rough math. Where would O&M, therefore, what component of that revenue will be O&M?
I told you that
as you continue to execute.
As I told you, this is 83 crore rupees almost currently.
Right.
Which, see, where the O&M comes, 1 year, 2 year, you have to give the in a free or the in a tender position. So that revenue comes in your kitty by after 2 years of plant operation.
Understood.
So in 2028, as I told you, it will be go to about 200 crores and more.
Okay.
And in terms of your hybrid model, that's something that's picking up, that's something that we are seeing more tenders being floated as well. So what's the outlook going forward? You know, you have solar, you have wind, mostly solar. How does the potential for hybrid increase?
Hybrid is the solution for the RTC power. Because each wind are obligatory to the solar and solar is obligatory to the wind. Solar comes in the morning and wind comes at night. So most probably I can say the RTC, if you are doing the 50-50 both the component, you will get the at least 15 to 20% RTC power. So it is a best solution, as I told you, it's a best solution for the RTC power as a hybrid and very cheapest solution also. After that, of course, the battery and the pump storage is the solution. But for the RTC, nowadays, today's is a good solution is a hybrid. And we have already done our own hybrid in IPP and for the customer also, we have done the hybrid and they all are happy.
Okay. My last question, sir, is to understand challenges. Because with every industry, with all blue sky situations also, there can be challenges. What, in your view, from a sector or from a company perspective, are the challenges which KPI Green will face?
See, in this growth trajectory, you require the more good people who known to the industry and who knows the job. That's a challenge, number one. And number two is, of course, the regulatory things and the duties which are implied today, which give you the IRR effect. That's the only thing which can see in the challenge today. But it will covered by the expert and the experienced people. So this is not only the green or the renewable energy, this is a sustainable energy. So we once have to move over here, and we are on a path, and we give you the guarantee that we will contribute of the national mission 20305 500 gigawatt by Sri Narendra Modi, and we will give our best contribution in that thing as a KPI. Thank you very much.
Thank you so much, Mr. Patel, for joining us and giving us an outlook and, you know, giving our viewers more of an in-depth detail on how the business works, and we wish you all the best.
Thank you very much. Thank you.
Thank you, Mr. Patel. But with that, we're out of time on this edition of KYC. That's all we have. Thanks for staying tuned with us. From Mihika, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action just on the other side.